Today, let's break down and understand all about SMC concepts. I promise you, after watching this video till the end, you would have a better understanding about SMC concept, and this will improve your overall experience for better. Make sure to watch till the end, and don't forget to subscribe to this channel and watch other of our videos as well. So guys, what's up? Welcome back. So last week I didn't drop any video. I was kind of busy and I couldn't drop videos, but don't worry, I won't miss a day like what I did last week. Okay, now you're gonna be getting videos as usual. Now let's go straight to the point. So today I'm gonna show you a step-by-step you can use or you're gonna apply to your trading system, which is gonna improve your profitability. So this is a video about SMC, and once you understand this whole concept, you should be able to, paddle your own canoe very, very well. Okay, now let's just go straight to the point. Now the first thing you need to understand is what market structure. I always say market structure, or I always talk about market structure in all my videos, because that is the skeleton of the market, and that is what makes the market what it is. Okay, so after you understand this market structure, then the next thing you want to understand is what the overall smart money concept. Okay, where is your BOS, your change of character, and imbalances, all the stuff you want to understand it as well. Then you want to understand order blocks. Okay, what order blocks are, how to find a very good order blocks, and what are the criteria that makes a decent order blocks. Okay, now all these things I'm going to explain in this video, so stay tuned to the end of this video because you're going to understand everything you need to know about SMC concept. Now let's go to the market structure. Now as we can see right now, we are on the daily time frame of the Euro USD, okay, which is my favorite pair. We're on the daily time frame, and we want to see the overall market structure of the daily time frame. Then I'm going to head over to the next time frame, but make sure you take note of these time frames so you can incorporate these things in your own trading. Okay, so let's just go straight to the point. So on the daily time frame, I don't want to start from a long period of time, so let me just do what is in front of me right now. Now we can see we had a push down or a pullback to this bullish area. Then we headed over to break that structure, which is a breaker structure. Then we pulled down again to this bullish area. We took prices up to break this recent high, made another breaker structure. Then we pulled down to this area, which is the last point we got to right now. So the whole thing that has been happening on this Euro USD is just an internal rate. So let's just map these things out. So we're gonna call here a breakup structure. Okay, we're gonna call here a breakup structure. Then we head over to this area where we call here under breakup structure, which is still bullish as well. Then we go over to this area as well, which is a change of character. Okay, this is a change of character. Why do we call this a change of character? Because this used to be the recent low, then we just broke that recent low right now, which is leading to a bearish structure, a supposed bearish structure. But then for a supposed bearish structure as well. So we're gonna call here a change of character. Okay, sorry for that. We're gonna call it a change of character. Now on the daily time frame, we have the highest point with the price has gotten to, which is this area, looking good right now. So this is the daily time frame swing high. So we're going to label here a daily time frame swing high. Then we head over to this downside, which is the daily time frame swing low. Now there's some other things you need to know about this smart money concept that will help you understand some things. Now we need to understand what is a single structure and what is a breakup structure. And how do we understand what a single structure is and what a breakup structure is? That is very simple to understand. To confirm or to have a valid pullback, which we're going to confirm the break above it to be a breakup structure, or the break above or below it to be a breakup structure as well. I don't know if you understand what I just said. I said the first thing we're gonna do is to have a valid pullback. What is a valid pullback? A valid pullback is a pullback that occurs when the last candle at the highest point, or the swing high or the swing low level, has three candles above or below it. Okay, it's very simple. Now let's take a clear example. Now let's say this is the highest candle here, then this is the highest candle, this white area, then we have three candles below. This is 1 2. Since this is 1 2, we need one more candle below it. Now we headed over to the side. We didn't complete that 3, but this is just a fake out. Okay, this is just a fake out. Why did we call here a fake out? Unless we have another one above it, then it is just a single structure. But if it's just one that broke that series, or that serial action there, okay, why do I call it a serial action? Because we just need it to just from 1 2, then we need the third one which confirms it. But now at this point we had just 1 2, then we had this one that broke this serial structure. Okay, now this is just a fake out or a pull of the market. The market was still able to pull down below this, then we continue coming down. Okay, now this is a valid pullback. Now let's go to some other places and let me show you something that is an invalid pullback. Now let's check out this area. Now we headed over to this side here. Look at this area right here. We headed over to this side here. This was the highest point. Now we have just one. After that one, we did not have another one below it. We had this and we continue going up. Okay, since we have the structure this way, means the whole thing that happened here was just a single structure. Now this is another place that looks like a pullback. Look at the highest candle here, 1, then we had just 1, then we had this 2. There's no third one there, means the whole thing that happened just headed to this side as a single structure. Now look at this place right now. We had just 1, we had 2, then we had this fake out, then we had this third one. Means this is a valid pullback. Okay, this is a valid pullback. Okay, look at what I'm trying to tell you here. See, 1 2, we had this one. I told you the first one is a fake out, then we had another one below this area. Now if we're gonna check it very well, we can see it very well. You can see, oh, I'm sorry, that was not what I wanted to tap. Now we can see that we came below this area, means this is a valid one. This is way different from this. Look at this, we just had 1 2, then we continue going up. That's why I call this a single structure, which is not a valid retracement or a valid pullback. No, a valid retracement precisely. Okay, but in this area we had a valid retracement. Okay, now with this strategy, this will help you shovel your way around, or try to what should I put it in, or this will help you avoid liquidation. Okay, this will help you avoid liquidation because you are buying at a very decent range. Okay, this will help you avoid liquidation, so you won't just get liquidated. So this is the most recent area that is a breakout structure at this level here. So this is it right here. So this is the most recent area that is a breakout structure at this point right here. Now as we headed over to this area, then we had 1 2. Like I told you, the whole thing here is just a singular action. Okay, it's just a singular action at that side, so we can call this just a single action above to this side. So let's check out this. Then we had 1 2, we still have another one higher than this, so this is still to this side. So we had 1, we had this fake out, we had this down, this is still invalid, then we headed over to this side. So for those of you that are going to put your, let's say you're going to have a breakout structure here, you're going to say that is a breakout structure, would have been liquidated down to this recent low area. Okay, you can see the classicness of this strategy I am showing you right now. Let's on some kind of shitty let's on some indicators, and you're going to see, okay, this indicator did not even mark here as a breakout structure. This was pretty much cool. So you can see at this range, this indicator mapped out here as a breakout structure, Why? With our strategy, we said those areas were invalid. Okay, so This is how the recent area looks like. Okay, then the next thing you want to understand after doing this is very simple. You need to go to a lower time frame, because most of us are scalpers. I'm a scalper, and I know most of you watching these videos are scalper. For your day traders or people that trade for a long period of time, okay, you can stick to the higher time frame and so on and so forth. But for me, I would head over to the lower time frame, such as, let me say, 30 minutes or 1 hour. So but for this video, I'll be using 30 minutes precisely. Okay, now I don't want to analyze so much, so let me just analyze the ones I'm seeing here. Let me just look for a valid pullback and a break above that, and I work with that. Okay, now look at this area. We had 1, 2, 3. So anything that pulls above this is a valid break of structure. So since we pulled above this, so we have this valid break of structure sitting out. Cool. Okay, so this is the lowest point at that market, and this is the what highest point of that market precisely for now. So what are we going to do in this lower time frame? It is very simple. It is very simple. What we need to do is to look for decent ranges where we can get the market. Now for that, I apply my Fibonacci tool to get decent range. Okay, now for my Fibonacci tool, this is my Fibonacci tool. So I'll take it up to down. Since we are buying, if we are selling, it's down to up, or it's down, it's from up to down. But if we are buying, it's from down to up. If we're selling, it's from what? Oh, sorry. If we are buying, it's from down to up. If we're selling, it's from up to down. Okay, but since we're buying right now, so we take it from what? Down to up. Now, my Fibonacci range gave me this. This is looking cool. So what do I do with this range that I just got right now? So the next thing I do is I head over to the lower time frame. Okay, so I head over to the what? To the lower time frame. I'm sorry. So I head over to the lower time frame. And what time frame am I going to use for this trade? I'm going to be using the 5-minute time frame to get this. Okay, you can use whatever time frame you feel suitable with, but just make sure it is lower than the time frame you are getting your analysis on. Now what am I going to be looking for here? I'm going to be looking for a push and pullback, and I'm going to be entering the trade. But some people want to use the traditional smart money concept, in which they will be looking at the recent coach area. The recent coach area should be somewhere here. Okay, so they'll be looking for prices to break here, return back, and start evaluating to the upside. But that's not what we want to do right now. We want to take quick trades. Okay, now for this strategy to execute this trade, it is very simple. What am I going to be looking for? I'm going to be looking for the last candle that tapped into that zone. This is the last candle, and I'm going to be looking for 3 candles above it. Since we are buying, 3 candles above it. But if we are selling, we're going to be looking for 3 candles below it. Okay, it's very simple and straightforward. Now 3 candles above it, we have 1, then we had this fake out, and we had this other one. So everything is still invalid. So we start counting from this last one. We had 1, 2, 3. Okay, so since we already have this 3, then we're going to be looking for 3 candles below the last high. Now where's the last high? The last high is definitely this. Then we had 1, 2, we had this fake out, then we continue going up. But look at this area here. We had 1, this fake out, 2, 3. So what am I going to do? I take my Fibonacci tool, we will hop to this level. Okay, so I want to buy at this 50% area. Okay, so I take my market at this length right now. Okay, so how do I set the trade? I place my buy order. I take 5 pips away from this level. This is supposed to be my stop loss, but I take 6 pips away from this level. So that would be like 11.8 thereabout. Okay, so I put 11.8. So 11.8 already broke this low, which is sitting cool. Okay, now what are my targets going to be like? I'm going to be targeting 3-to-1 ratio. Okay, now if I'm targeting 3-to-1 ratio, that'll be sitting on this area here. So let's see if our trade got to 3.1 ratio. So looking at this right now, we got to our 3 2-1 ratio. Now let me tell you something you need to understand about this strategy, that there are process you need to take, to execute or to enjoy this strategy. The first thing is that you want to adjust your stop loss to your entry immediately prices gets to like 1-to-1 ratio. Okay, so if we get to like 1-to-1 ratio, you want to adjust your stop loss to your entry point, which is this point right now. Okay, so as soon as prices head over to like 2-to-1 ratio, you want to adjust your stop loss to your 1-to-1 ratio, which is somewhere seated around this zone. Okay, then from here you already know that this area is secured. This area is secured. No matter what happens, you're still gonna come out with profit. Okay, no matter what happens, you're gonna come out with profit. Then you want to continue moving up to the 3-to-1 ratio. Okay, so this is how to enjoy the profit of this trade, but you can do it whichever way you understand or whichever way pays you. Trading is a private game and you need to treat it the way you do understand it. Okay, so you can take multiple trades on this zone, but to take multiple trades on this zone, you need to understand something which is very important. Okay, this is a very important part to take multiple trade on this zone. Before you take another trade on this zone, since we are still looking at the buy for the overall, you need to make sure that the next area you want to take sweeps this low. Okay, so if you get another area that sweeps this low, you can attend to that area. Okay, I'm going to show you my own trade I took for last week using this strategy, okay, that I already plotted out, but this is just a plain one that I've never touched this part before. Okay, so let's go again. I said the last one that touched it, we're going to have 1, 2, we had this fake out, then we had 3, then we headed over front to this area. Okay, then we're looking for a nice pullback. Let's get a nice pullback. This is the highest level. Now we have 1, we had 2, we had this fake out, so everything here is invalid. So from this side we had 1, 2, then we had invalid going up to this area where we had 1, 2, 3. Okay, so what are we going to do? We're going to do the same to it as well. We're going to take this Fibonacci to rule to this upside. We want to get prices buy at this 50 range. If you watch this video multiple times, you're going to understand what I'm just saying in this video. It's very simple, very easy to understand, and we're going to do the same. So I said this is going to be my stop loss, but I'm going to get 6 pips after this. So once we count 8, we get 9, 10, 1, 2, 3, 4. Okay, so that will be like 14 pips. So let's take it up to 14. So we'll be sitting here and we do the same to it. We get 3:1 for our trade. Now for our 3:1, did we get to any 3:1? Most definitely we got to a 3-to-1 ratio. Okay, now if you want to take another one, you make sure you sweep this low as well. So sweep the low. Now we swept this low a little, so we're still looking at opportunities at this side. Then we do the same thing to it. Okay, so we got 1, 2, 1, 2, then we got 3, then we headed over. This is just an internal range. We started going up, then we had just 1, 2 invalid, and this, then we continue coming down. Okay, so we can take another nice trade from that area. Okay, understand all these things. It's very simple and very easy to understand. And we do another 3-to-1 ratio. Let's check. Okay, let me make this sit very well. Let's just sit on this range. So let's check. So we take this to like 10.7. Okay, so let's see if we got another 3:1. So as you can see, we got another nice 3:1. You can see how simple this strategy is and how easy this strategy is. So this is how I execute my own trades, and it's very simple. So let me just head over to my normal one. So this is the one I just did right now. You can see most of my trade I took before were not here. Okay, so let me just head over to this area where I'll get this. Okay, so this is it. So you can see, this. You can see mine. You can see one, two. We got this. You can see the trades I took for it. You can see all my trades I've been taking using my strategy as well. You can see all my trades. So that'll be all for today, and see you guys next week. Make sure you watch this video multiple times to understand the whole concept I just taught. Thank you.